On today's episode, we are going to take a look at two new growth stocks. The first one is in the plant-based industry, but it's not in the food industry. This one is in the plastic industry. The second is going to be an electronics company that is based 100% here in the United States, so it has a lot of defense companies working with it. Both these companies are growing at crazy levels and should be added at least to your watch list right now. Like always, my name is Jose Najarro and I am a self-taught investor, and if you want to learn more about becoming a better investor, make sure to check out my Patreon where we have weekly educational videos, we have weekly watch lists, and much more. You should also see links below to all my social platforms: Twitch, Discord channel, which is free to anybody that wants to join, Twitter, and other channels as well. And finally, if you want to get a free stock, there should be a link to Webull down there. If you sign up using that link and deposit $100, right now we're running a special that you get 2 free stocks and I get 2 free stocks. So make sure to check that out. So let's get started with today's episode. All right, so let's take a look at the next thing that Q has in store for us. I think I'm gonna just make a short clip out of this episode and just call it the Q episode. So SLGBF. All right, so this is Good Natured Products. So Good Natured Products is formerly Sogear. It's a publicly traded bioplastic company founded in 2006 and is based in Colombia. And for those that don't know, if you ever see a ticker end with the letter F, it's because it's a Canadian company. Q, for some reason, loves his Canadian companies, and they seem to be pretty cool. This is another, what many would consider penny stock. It's another company that's probably going to be a very small company. So I wouldn't go with the market order. This is a company, if it looks good, I would not make it a big portion of my portfolio, just because it will be very, very volatile. We can see Q has done amazing with these companies. And like I said, this one has done, I thought that said 4,000%, 400%. So let's take a look at the Good Natured Products. So they have a great presentation for us. So what do they do? So become North America's leading earth-friendly product company by developing plant-based products and packaging and acquiring relevant companies that expand our assortment, customer space, market reach. All right, so now we all understand what this company does, right? They kind of make plant-based products and packaging. So things are scaling up. They have about 385 products. They have about 400 reoccurring business-to-business customers. They're in 50 states and provinces. Strong revenue growth and stable margins. So pretty impressive. We can see revenue is kind of weak. So they have about $5 million in revenue in 2018, and they have about $10 million in the revenue in 2019. Strong growth, right? They had compounded annual growth rate of about 172%. I'm pretty sure a lot of it has to do because of this. In the past few quarters, it's been more like 100%, it seems. They have GM gross margins, I believe. Gross margins of 34%. So we can see, obviously, making these types of products are a bit expensive, but they still have a consistency of 34% gross margins. Year over year, quarterly revenue growth, pretty strong. We can see each year they're getting higher and higher. So Q4, they're probably going to expect a lot more revenue growth as well. And also, let's take a quick look at their products. So here at their website, we just go to products and we can see they have food packaging. Here in food packaging, they have bioplastic food packaging for all types of things: baked goods, deli and prepared meals, fruit, vegetables, simply secured. Then we can see they also have compostable takeout containers. This is probably for like the restaurant business. They also have home and business products. This one's a little weird. Okay, so this is our bins, totes, and crates that are 90% plant-based. So this is pretty cool. You can, I guess, shop for them. And here they have, oh, okay, so this is what they mean. They have the recyclable tops, the recyclable bins. And here, if we take a closer look at one of their informations that they have on their websites, they kind of talk about their 5 business groups. The first one is packaging. Here in packaging, they have like stock packaging, which is for like the bakery, deli, and produce, food packaging designs. Then they have custom packaging. These are custom design packagings for food, general merchandise, and medical supplies that meet specific customer requirements and are delivered through exclusive and or multi-year purchasing agreement. That's actually pretty cool on there with the custom packaging, them hitting the medical supply field. The second business group is the food services, and this is a variety of containers, cups, bowls, and other cutlery to meet the ends of takeout and delivery food establishments. I think this is pretty cool here, especially here in the United States. We're seeing a lot of states kind of banning the form of plastic use in restaurants. I know here in New Jersey, we're seeing that kind of law being passed in for the next few years. So I wonder how things like this, like degradable packaging services, how they could expand into states like this. I know California is doing something similar. I would expect states like Hawaii to be very similar as well. So number 3, products, everyday home business organizations and commercial products with high purchasing frequency and a focus on removing chemicals of concerns in our kitchens, food, and again, the medical supply chains. Here they're including shields and packing supplies. So if we take a look at their products, they also have, let's just go a little closer to the products. We saw the bioplastic food packaging. We saw the compostable takeout containers, home and business, but they also have stretch wrap. So I'm guessing this is for the shipping business. And this is pretty insane. The stretch wrap is about 51% plant-based and contains no chemical of concern. And these are being used in big, these are things that are used in big companies. So again, this is something as plastic, if plastic starts to fade away, definitely a product that I can see being used in the future. Then they have the industrial, which is complementary, eco-friendly inputs to the retail, restaurants, medical. And this is pretty cool. I keep seeing that medical market being hit here. Manufacturing industries, including extruded sheets and biodegradable agents. And finally, in the service, they supplement service offerings such as design, prototyping, labeling, and mold financing to support customer requirements. Oh, that's pretty cool. I guess maybe there's some companies that want to create their own thing and they can use this good nature product as more of a facility to create those products or prototype those products. So we can see these are the 5 different markets that this company is hitting. For me, I'm pretty cool I'm happy to see the food service run, right? But also that they keep talking about the medical field. Overall, this is a market I can see improving over time. Let's take a look now at some fundamentals of the company. So right, it has a market cap of $158 million. This is a very small company, like I mentioned. Future growth. Analysts are expecting this company to grow dramatically. And not only because the market is improving, but I'm pretty sure they're just becoming bigger and they're just hitting more customers. So they're seeing 51.6% growth. Financial health. I wonder, this is actually pretty weird. I feel like I'm seeing this with a lot of Canadian companies that their liabilities and their debt is pretty strong compared to their cash. So this is something we have to do a little more research on and try to understand why. All right, and now we were just talking about their balance sheet. I want to just take a closer look at it. So we can see current assets. They have about $3.8 million in Canadian cash available to them. But they do have a nice amount of debt. In current debt, they have a credit line of about $2.1 million, and they have current portion of long-term debt of about $1.3 million. That's about $3.4 million of short-term debt. They have more cash to be able to pay that, which is great news. Then they do have a lot of long-term debt, and most of the long-term debt is actually coming from different acquisitions. This company, even though it's so small, it is acquiring other companies with similar markets, and we're going to take a look at one in a bit. But right now, long-term debt is about $18 million. This is way more debt than they have cash, and that's why earlier on we saw that huge shareholder deficit. But if we take a look at their debt, most of that debt, more than half of that debt, is not due till after 2025. And I want to say another 25% or so is not due till 2024. So most of this debt is not due for a long time from now. We can see the current portion is here of 2021. 2022 with this about $3 million being owed in around 2022, I believe might be a little sketchy for the company based on how it's doing right now. But if it continues to grow its revenue, if it becomes positive from cash flow from operations, it might not look as scary, or it could just probably just push that debt for a later time. And I'm pretty sure that's the way it's gonna go. So right now, in December 22nd of 2020, so about a few weeks ago, the company actually closed an acquisition with Integrated Packaging Film. And these are some highlights there. They're seeing huge revenue there, trailing 12 months revenue of about $17 million. And this adds just under 100 business-to-business customers, growing the company's business-to-business segment to a total of approximately 500 customers. So by them purchasing this company, they've actually increased their customers, their business-to-business customer, by over 25%. And this company that they bought, most of their sale mix is in the United States. We can see right now Good Nature is pretty focused in Canada, but now with this purchase, in this acquisition, they're entering more into the American market as well. So it also adds the medical and the electronic market segments to the current industrial business group. So we can see right now management is actually being pretty aggressive with the things they are doing with this company, and I'm really happy to see this out right now. One thing I definitely don't like about it though is that they have, even if we take a long term, they have a lot more liabilities than they do have assets. Overall, the cool market, fundamentally not the greatest thing. So before I take a look at any of the next Q, Q have mentioned a few, but if anybody wants to mention another one before I take a look at Q, feel free to post it. All right, IEC Electronics. All right, Danny, let's take a look at yours, and then we're going to come back to Q after that. So IEC stock. All right, so was set up in and it's now based in Newark, New York. So they focus on electronic contract manufacturing services, such as circuit cards, bolts, and cables. So actually, let's take a look at their stock price. In the past year, the company has gone up 50%, great returns. Market cap 144. Man, where are you guys finding all these small market cap companies? This is insane. So let's take a look at what they do. They have electronic manufacturing solutions for life-saving and mission-critical products. All right, let's see investors relations. All right, so this was not too long ago. It was September 25th, so about 3 months ago. So the electronics manufacturing services provider, they do life-saving and mission-critical. So I'm pretty sure they're in the self-defense market, which we're going to see. They partner to Fortune 500 companies in regulated markets, and they're 100% United States manufacturing. Just because of that, I know they are definitely hitting the self-defense market. So industries-driven approach. They're in the aerospace, they're in the medical, industrial. Again, yeah, just because they are here in the United States and they're 100% manufactured in the United States, they're going to take a lot of great companies there. We can see they have L3Harris, they have Lockheed Martin, two big national United States defense companies here. They have General Electric. Not sure these other two here, but just because they have companies like Lockheed Martin and L3Harris, that is pretty bullish in my opinion. So their market segment, it seems like 60% of their market comes from aerospace and defense, a market I'm very, very familiar with and a market I'm very bullish on. 22% in medical field, pretty good. 18% in industrial. They're creating semiconductor manufacturing equipment, so that's pretty cool. So let's take a look. I want to see now their revenue growth. Steady backlog improvements. So their backlog, they're seeing strong growth. Revenue growth. So 2017, they had about 100 million. 2018, they've had about 117 million. 2019, they had 157. So they have more than 34% year-over-year revenue growth. We can see this is a strong growth company right now. They have positive gross profits, and they're actually also profitable in net incomes. That is impressive too. So they're profitable and they have great gross profits. So next, let's take a look. And one thing we can see, they're also improving from 2019. Let me just zoom in so you guys can probably see. So here, revenue of 2020 compared to 2019, we see improvements in both revenue. We see improvements in gross profits, and we're seeing improvements in net income. That's definitely a plus. And they're also investing for growth. So they're building more facilities, it seems. They're moving ready in October 20, which is expanded capacity. and expected efficiency gains. And this is pretty impressive because right now we just got hit with this whole COVID situation. So for a company like this to go out and demand even more room and demand more facility means that their business is still doing amazing. They just acquired another facility in Rochester, New York as well. So overall, company looks good, right? If we took a look, strong revenue growth, they're hitting great markets. A United States company here with hitting United States markets. Very, very bullish there. Let's take a look at their fundamentals. We already saw, right, their future growth was amazing. And here we can see a future growth is expected to be 42.7% on average for the next 3 to 5 years. Then we have cash flow from operations. They're positive in cash flow from operations. They are positive in earnings. Financial health. All right, so first thing I'm seeing is at least they have positive equity. That's a good news. If we take a look at their physical assets, it looks like this company has no cash right now. And most of it is they have about $20 million in debt. And let me say this. This is a company that we can see is in the hardware design. So obviously most of their money is actually going to be most likely in receivables or other form of physical assets or inventory. Inventory for hardware companies or even food companies, right? Inventory is one of the things that helps them make sure that they're positive cash flow from operations. And a lot of that debt is probably coming from the facilities that they just bought and from the and from just the new buildings that they're working on. So these are probably just long-term loans here that we're seeing, and they do have a strong amount of inventory from what we can see. A lot of receivables, enough to pay off that accounts payable. And again, this one is American trade. It is an American company. It's traded under the NASDAQ. The only thing I would say, stock price, they're a little bit overextended. And what tends to happen when a stock price is overextended, they kind of pull back a little bit. Not necessarily a guaranteed. And it's not something I look at when investing in a company, when investing my first time in a company. But when buying additional shares in a company, that's something I will definitely take a look at later on. So I hope you guys enjoyed today's episode. This was actually just some highlights from my most recent live stream. So these are pretty much just ran by you guys, the viewers. And if you guys have any questions, feel free to check out my Twitch. You should see the link down there below. And I'm streaming every Mondays and Tuesdays at 8:30. And now I'm looking for a third day to stream. I just recently posted a poll on my channel. So make sure to vote there so you know when I'm going to stream next. So take care, guys. Have a good day and enjoy the market.